All right, let's dive into AFC Energy. Today, we're tearing down their 2024 annual report to get right to the heart of the investment case. We're talking about a company that's right on the cutting edge of the hydrogen revolution. So we're going to break down their strategy, the money, and of course, the risks.
And let me tell you, their mission, stated right up front, is a big one. This is the grand vision that gets everyone's attention. Replacing fossil fuels, not just chipping in, but actually replacing them. That's the huge opportunity we're looking at here.
So how'd they actually do in 2024? Let's hit the highlights. First up, £4 million in equipment sales. Now, for a company that's just starting to move from the lab into the real world, that's a pretty significant number.
And to fuel that shift, they raised £15.8 million. That's a crucial injection of cash, especially in what the report itself calls a challenging small-cap market.
And operationally, they've built a facility that can crank out 250 fuel cell units a year. So this isn't just a science project anymore. This is a real manufacturing operation that's ready to grow. So the stage is set. Let's get into the strategy.
Okay, so AFC Energy has made a really smart, deliberate shift. They are laser-focused on the construction sector. And that's not by accident. It's a market where the rules are changing fast. Zero-emission mandates are coming in. Diesel subsidies are being cut. So construction companies don't just want a green solution, they need one, like yesterday.
And this right here, this is the audacious goal that their entire strategy is built on. The chairman makes it crystal clear. They're not just aiming to compete with diesel, they're aiming to beat it on cost, on site. And get this, they want to do it before 2030 without any government handouts. For an investor, that's pretty much the holy grail. If they can pull that off, the market potential is absolutely enormous.
So how on earth are they planning to do that? Well, the company has this really clever two-pronged strategy. See, it's not just about selling generators. It's about solving the whole hydrogen problem from top to bottom.
On one side, you've got the H-Power fuel cells. Think of this as the business for today. It's about getting hydrogen generators out to customers who need clean power right now. Then, on the other side, you have high-tech ammonia cracking. And this, well, this is the business for tomorrow. This is about solving that fundamental problem of how you get cheap, easy-to-use hydrogen fuel in the first place.
Now, for investors, that H-Power strategy is a lot less risky because of their joint venture with Speedy Hire, which is a huge equipment rental company in the UK. This isn't just a partnership, it's a built-in sales channel. It proves there's a market for their products, and it's where that £4 million in revenue we just saw is coming from.
All right, now this number is tied to their second strategy, high-tech, and it might just be the most important number in this entire report. The company claims its ammonia cracking tech can produce hydrogen for 90% less than the current commercial options. If that's true, well, that's not just an improvement, that's a complete game changer.
So, instead of trying to move bulky, high-pressure hydrogen around, which is a total headache, you transport cheap, stable ammonia. It's already a global commodity. Then their little cracker box turns it back into pure hydrogen right where you need it, when you need it. It basically solves hydrogen's biggest logistical and cost problems in one elegant move.
Okay, we've seen the vision, we've seen the strategy. Now it's time for a reality check with the financials. This is where the rubber really meets the road. Let's see how this ambitious plan is actually looking on the bottom line.
Which brings us to the one crucial question that any investor has to be asking. The tech is cool, the strategy makes sense, but is the company actually making any money?
And the answer for 2024 is a resounding no. The company lost £17.4 million after tax. This is just the stark reality of being a tech company that's trying to scale up. They're pouring cash into research, manufacturing, and sales, and all of that costs money long before the profits start rolling in.
So how long can they keep that up? Well, at the end of the year, they had £15.4 million in cash. You can think of this number as their financial runway. The report suggests this cash will last them until about March 2026, but that runway is going to shrink fast as they ramp up spending.
And this leads us to a really critical point. And this is a direct quote from the company's own financial review. It says there is a material uncertainty with regards to going concern. Now, in plain English, that's accounting talk for there's a real risk we won't have enough money to stay in business for the next 12 months without finding more funding. While they're confident they can get more, this is a very clear and explicit statement of the financial risk involved here.
To their credit, the company is very open about the hurdles they're facing. So let's break down the main risks they themselves have pointed out. This is absolutely essential stuff for any investor to understand.
This table really lays out the core challenges with brutal honesty. They're flagging 3 key areas. First, commercial risk. Can they get their costs down enough to actually compete? They rate both the likelihood and the impact as high. Second, operational risk. Can their supply chain actually handle a massive scale-up? And third, the big one, financial risk. The company isn't bringing in positive cash flow yet. Again, high likelihood and high impact.
So you see all those challenges? What's the plan? The company seems to be signaling a brand new chapter, one that's all about making that tough transition from a research company to a full-blown commercial business. And the biggest signal of all? A change right at the top. AFC Energy brought in a new CEO and a new CFO, and the report specifically calls out their expertise, a proven track record in scaling engineering companies. Now, this is a very deliberate move. They are bringing in leaders whose main skill is to solve the exact operational and commercial problems that the company just identified.
And that brings us to the final, critical question that really sums up the entire investment thesis. You've got this fascinating 2-part technology strategy that could genuinely disrupt the energy market. You've got new leadership brought in specifically to make it happen. But it is all a race against that ticking clock of their cash runway. Can AFC Energy get to commercial scale and profitability before the money runs out? That is the billion-dollar question at the heart of the AFC Energy story.